Thanks for tuning in. Well, a great day of trade for the Aussie share market. Just in the first hour, we're 2.7% higher, and about 1 p.m. we're 4.4% higher, fueled by a lot of things. One, we had a rally on overseas equities, fueled by US President Donald Trump signing that bill that expands paid leave to workers amid the coronavirus lockdowns, inking a stimulus package that's worth potentially $1 trillion US. We also saw the oil price make its biggest one-day gain ever, up 23% overnight. On top of that, the Reserve Bank of Australia kicked off bond buying today, buying $5 billion of bonds, injecting new money into the economy. And it's the first ever transaction of this type. It's called an open market operation transaction aimed at lowering long-term rates. In further good news, NAB froze all personal home loan customer repayments for the next 6 months for those experiencing crisis amid coronavirus. It comes following the Australian Banking Association doing the same to small businesses. NAB's announcement is also welcome news. It means that about $10 billion could be injected into the economy over the next 6 months, or $380 million a week, depending on customer need and take-up. Just calling out the sectors, most are making green tracks today. Property up the most, 15%, followed by the energy sector, which is up 8% after the oil price surged overnight. With investors willing to take on more risk, only two sectors are in the red today, and that's staples and telcos. As for the key standout stocks, Afterpay is up 47%, hitting $14.40, somewhat clawing back from the buy now, pay later selling that's been occurring of late. Telecommunications, engineering and infrastructure building company Cimic is up in the order of 45% to $18.90, while property and real estate managers are following, including Scentre, Mirvac and Goodman Group, all up in the order of about 20%. While the downtrodden corporate Scentre travel CTD shares, they're up 23% to $5.55 after announcing it is in a sound financial position and doesn't need to raise any equity. It also reassured investors, saying 50% of its business is domestic in nature. Despite today's gain, it's still down about 72% year to date. Despite that, RBC and Credit Suisse are saying their shares are undervalued. In fact, Credit Suisse is targeting a price target of $12. So something to think about. Well, if your bank hasn't cut its rates, I'd be telling them what NAB has announced today, along with what CBA called out yesterday, taking small business loans lower by 1% and cutting 1 to 3 year loans by 0.7%. And lastly, the Australian dollar is bouncing off 17-year lows. It's tracking higher on the back of the RBA's stimulus. It's now at 58.48 US cents.